Yo, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today with another ADH wealth solution. Today, we'll begin to discuss fulfilling all of your financial needs. To contribute to channel growth, the links are in the description. To schedule an appointment of your own, or to purchase life insurance directly up to $1 million with no medical exam and an instant decision, my information is in the description. Lastly, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. And now, here's our next feature.
Yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I've returned today to whap and tap on your head with another ADH wealth solution. Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to schedule a one-on-one appointment with a licensed financial professional, links are in the description. As we proceed to give you what you need, today we're taking a look at a license exam manual, and this is talking about participants in the primary market. So we're going to learn a lot about the different types of things that participate inside of the market, and it will give a brief description of what each thing is, sometimes why and how. So we'll start here with issuers and corporations. So an issuer is a corporation, government, or other entity that is selling a security to raise capital for itself. They are issuing the security. They can issue both equities and debt issues, stocks and bonds. So a government entity may issue debt. Okay? There's also municipalities. So municipal governments issue muni bonds or municipal bonds and other types of debts. As a reminder, municipalities are governments, but at the state or lower level, such as counties and cities. This debt is sometimes called munis. Okay, then there are the federal government and agencies. So the largest issuer of debt in the United States is the Treasury Department, and we've already spoken about different types of Treasury debt, and those debts are sometimes called govies. So then there's underwriters, or broker dealers and investment bankers, so the people who generally sell you the securities. Underwriters, however, are a group of broker dealers or investment bankers that work with an issuer to bring securities to the market and then sell them to the investing public. Investment bankers help the issuer to structure capital raises and at times form syndicates. You'll hear about syndicates at like the trading desk or on the trading floor with other underwriters to facilitate this money raising process. And then there's underwriting commitments. So different types of underwriting agreements require different levels of commitment from the underwriters. This results in different levels of risk for the underwriters and the issuer. Then there's best efforts, firm commitment, which again is the investment. Well, let's look at best efforts. So best efforts is the banker acting as an agent. And best efforts underwriting calls for the underwritten syndicate to buy securities from the issuer, acting simply as the agent, not the principal. This means that the underwriters are not committed to purchase the shares themselves and are therefore not at risk. Okay. Now we'll take a brief look at firm commitment underwriting, which is an investment banker acting as the principal. Firm commitment underwriting is a widely used type of underwriting contract. Under its terms, the underwriters contract with the issuer to buy the securities. The underwriter buys shares from the issuer and resells the securities to the public at a higher price, the POP, and earns this price differential or spread for its efforts. Syndicates. So syndicates is in large firm commitment underwritings, it is common for a group of broker-dealers to form a syndicate. A syndicate is a type of joint venture where the BDs form up to share both the risk and the profits from the offering. One of the members of the syndicate will take a lead role and provide significant resources to the venture. This role is called the managing underwriter. Investors. So investors in the primary markets are those who are purchasing the new issue with the intent to hold the security for a period of time. They may be divided into three groups: institutional, retail, and accredited. So institutional investors. An institutional investor is an entity that pools money to purchase securities and other investment assets. Institutional investors can include banks, insurance companies, pensions, hedge funds, investment advisors, and mutual funds. Some institutional investors are called QIBs or QIBs, qualified institutional buyers. This generally means that the QIB owns and invests a minimum of $100 million in securities on a discretionary basis. Retail investors. Your typical retail investor is investing his own assets. Any investor that does not qualify as an institution should be treated as a retail investor. Though these investors may be quite large, most are smaller investors, as they tend to be less knowledgeable than institutional investors. Sales to retail investors have higher communication and disclosure expectations. Things like red herrings and prospectuses. Accredited investors. Accredited investors are a subset of investors made up of all institutional investors and certain retail investors. Retail investors who are accredited investors are insiders of security issuer, officers, board members, or major stockholders, or meet certain financial criteria. An income of at least $200,000 or more for the past 2 years and expected to meet the criteria in the current year. If the purchase is in a joint name, this number is increased to $300,000, or have a net worth of $1 million or more, not including the prime equity in the primary residence. So that's excluding owned real estate. Note that the investor must meet at least one of the above criteria, but does not need to meet both. The assumption is that the accredited investor will have a higher sophistication level than the average retail investor and does not need the same level of protection. Municipal Advisors. Municipal advisors are a type of investment banker that advises municipalities on the issuing of municipal debt and other types of municipal securities. Municipal advisors work under a contract with the municipality to provide advice on issues such as debt structure, bond features, and other issues involved with raising capital. Municipal advisors may assist in some of the underwriting functions, such as preparing the official notice, but they may not be compensated as part of the underwriting or sale of any issue they provide advice on. In other words, they may not switch roles from advisor to underwriter. And then it goes to the Security Acts of 1933, so we'll stop here. There is a knowledge check. There's some questions there from the exam. But that's going to be it for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, to purchase life insurance.
Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information, or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.